right, it's time to take a look at how venture capitalists are seeing investments in high-interest environments in Africa. Joining us now is Maria Rotilu. She's a general partner at Open Seed VC, joining me via Zoom from the UK. Great to have you on the show.
Thank you very much. Great to be here.
So I'm pretty sure, venture capitalists like you follow inflation, FX issues and interest rates in African economies. And, we know just yesterday the MPC raised rates by 150 basis points. How do you see the latest hike in Nigeria?
Yeah, no, great question. I think if we think about venture capital and what OpenSeed is trying to build, we're trying to back experienced operators who are creating value with that initial capital and support to getting them to do that. I think if you think about an interest rate environment that's quite high, it's pretty much limited liquidity in the economy. What that means from a, I guess, capital allocation standpoint is that most capital allocators are probably going to debt. And you can see, in terms of the falling allocation to venture capital more globally, it's getting tougher and tougher to raise venture capital in this climate because most people are putting capital in, I guess, debt instruments that kind of give high yields, which is deliberate because I guess governments are trying to implement these monetary policies to reduce the liquidity in the market and kind of take a hold of inflation. But there's a flip side to this. On the other hand, this is the perfect time for innovators, for operators, for people who have spotted problems to begin to solve them using technology. In this kind of climate, cost-saving solutions really, really catch on. In this type of climate, value creation solutions, expanding markets, giving people ways to earn more, to cut their costs, these become even more important in this climate. With every single, economic issue where you have high interest rates, where you have a downturn, you see some incredible startups going up. You see the gig economy coming off of the back of the fact that people were looking to save costs. You see shifting consumer behavior. So while this is a very difficult environment, if you think about the impact of just people's discretionary income, people's ability to earn, I think on the flip side, this is an incredible time for innovators to think and say, how do we create value in terms of reducing the costs using technology? How do we create value in terms of opening up markets for local entrepreneurs to global markets? These are a few thoughts.
Right. I guess, according to you, this is not the time to pack your bags and go back to your village, right? It's time to get innovative at this time. But what kind of solutions are, VCs looking to pile money into in Africa in 2024?
Yeah, that's a great question. It depends on the VC's thesis. I would say that for us at OpenSeed, we look at three major areas: the future of commerce, future of work, and future of health. If you think about commerce, Africa just contributes, I think, 3% to global commerce, or is it Nigeria at this point? But you see that it's a very low number in terms of our contribution to global commerce. And I think that technology is a key lever for this. So we are looking for innovative technologies that make it simple to access. It brings discovery, it brings transparency, it brings efficiencies, helping people who are creating both digital and physical exportable services, creating a technology layer that makes this easier for them and helps us really globally compete. I always say, Africa does not exist in a silo. Nigeria does not exist in a silo. Every single government is trying to implement policies to make sure that their economies are stable. I think we are in a very incredible point, despite the difficulties, for us to begin to look at the problems and see them as opportunities to create value and create, economic impact as well. And from a future of work perspective, we continuously hear the data that says that Africa, 1 out of 4 people are going to be African by 2050. We have the lowest median age. Most emerging economies have really aging populations, but we have this young capital. And yes, there's a problem and a discussion to be had around the quality of the human capital. But I think again, technology brings an interesting viewpoint because now there's a leveling in terms of the access, in terms of the information, in terms of the technology that can actually essentially get people being upskilled and offering value globally and creating that value that brings inflows into the country, that creates value for all, both investors and local economies alike. So yeah, those are a few things on the open seed side.
Okay, so what are the key elements, investors look for when considering, funding, say, a startup at this time?
At the very early stage, which is where we play, we are first investors in experienced operators just launching their technology companies. I would say that for us, it's really about the team. The reason why we've optimized for operators, and we define them as people who either have been at high growth technology startups, who've built startups of their own, and who can build technology companies, at least the initial versions of it. We really think that it comes down to the team. A great operator identifies a big problem, and they have the ability to be able to execute on it. I think that if you think about how investors think about what good looks like, it really boils down to the team. But there are two other things we also look at: the market opportunity. Venture capital is not a lifestyle business. Oftentimes, it looks at really large outcomes. So it's very important that I guess, impact financially and both economically is significant. Because it is a product, a financial product, it does have intentions to return to its original investors by investing in incredible startups and founders at the earliest stages. So I would say it's a combination of the team and the market and their ability to actually tackle that market and solve a big problem that creates economic value for investors and the economy.
And looking at the state of things at this time, do VCs still have the time to, guide, startups, even though they've invested in these startups?
Yes, some VCs have really incredible approaches to founder support, but there's also VCs that believe that the best founders don't need support. I think no matter how great you are as a founder, you will take all the support you can get. And one of the fresh approaches that we've brought from an open seed VC standpoint is, even as we invest, we have a community of incredible operators. These are software engineers, these are product managers, these are people who've actually executed at global tech companies, who are there to support you and the founders with insight, with actual help, with things like recruiting, with things like code review, with things like product review. I think that things like this, or models like this with VC, is going to be critical, especially in this time, because it's so difficult to raise in the early stages. And to be honest, if you're trying to build anything noteworthy that's impactful, you would need all the help you can get from experts who've gone ahead and done it ahead of you.
And definitely, cash flow is really important at this time, for startups and most of these tech companies. But, talk to me about common mistakes, some of these startups make or are making currently, making it hard for you to actually, invest in them.
Yeah, that's if we go through all the mistakes, we will not have enough time, but I'll touch on just a few. I would say that the first and most common mistake I tend to see is founders solving a problem that's not necessarily a problem. They think it's a problem, but the customers don't think it's a problem. So a lot of founders sometimes project their own passions and excitements on the market. The best founders I know have anchored on a problem. They've looked and said, this is a problem. The other thing I would say is that it being a problem is just the beginning. It has to be a problem that's recurring. It has to be a problem that's painful enough. It has to be a problem that you can monetize. It has to be a problem that you can build a business out of. There's a common saying that says that there might be a gap in the markets, but is there a market in the gap? I really, really think that the best founders anchor on a problem and they iterate and they execute and they experiment and they see that there is a problem here that's large enough to not just house a problem, but also a market and a sustainable business model on the top of that. If you look at the successful technology companies we've seen today, companies like InterSwitch, companies like Paystack, like Flutterwave, you've seen a lot of fintechs that have come out. They all stem from a problem. Someone woke up and thought and said, there is a problem here, and maybe there's a business here, and we shall experiment on that. And it got to where it is, over time. So I think those are a few problems that I tend to see in my work as a VC.
Right. I guess if you identify that problem, make sure it's a real problem. Definitely. Well, thank you so much. It was great having your perspective. Maria Rotilu, General Partner at Open Seed VC. Thank you so much.
Thank you for having me.